Hey, you hear me?
What's going on?
Hey, so I looked at
Yeah,
that. That's great. That's that's 40 individual contracts. I didn't know that. That's funny.
yeah,
Okay, so when I talked to him, he's okay with the terms being like, so I wasn't aware when I called him that these were like individually under contract for, I thought they were, but I asked him where that was and he was kind of unclear, and maybe that was just my fault for not being clear about uh, what, how they were under contract already. So he was asking
yeah.
me to send him over the numbers, but conversationally, he was okay with, for example, a commercial lender bringing 70% and him carrying the other 30%.
Okay.
So, bro, when I'm looking at this, did you get my email with the numbers?
Yeah, I'm looking at it.
So, like, I don't know if you want to JV this or if you want to like buy it out and go single man, but I contacted I started an inquiry at My Investor Loan, which is Pace's, the lender, just to
Right.
see what we can get. They do want a bunch more data, but I did put in the initial request to get it started, and it only allows initially room for one name, and they wanted an LLC name, so I made one up, which they can correct
Okay.
later. But it looks like, so if let's say you were going to take a $200,000 assignment fee,
Uh-huh.
that would all be paid back in like 4 to 4.5 years, right? By the
Wow.
just by the cash flow, by doing a zero out of pocket deal. And
Wow.
now remember, I'm putting in $40,000 for upfront payments,
Right.
for like team payments.
Right.
So the private lender is bringing in enough money for 75,000 in initial renovations, because he told me he was going to do 3, maybe 4 roofs in the next 6 months. So
Okay.
I want enough bankroll to do that. They're small, simple roofs, so that's not a big deal. Um, bro, so I'm looking at this and I'm like, okay, so 200,000 minus 40 that we're already covering, right? To compare this.
Right.
So if we take 40
Hmm.
out to pay you, me, Dupree, and anybody else the initial bonuses, then divide the cash flow of approximately 40,000 per year at current rates, not even increasing rent. Divide that
Right.
into the 160,000 remaining, and that's 25%, right? So that's 25, equivalent to a 25% cash on cash return by leaving the 160 in the deal instead of taking it out. Bro, and technically it's infinite return, because if we can do it and get a private lender at 10% to cover those other expenses, and the seller's willing to carry the 450,000, it's an infinite cash on cash return.
Hmm. So
And
essentially, by flipping it to basically sub two, it just turned it to a legendary deal.
by doing what?
Well, taking it the creative route is what I'm saying.
A little bit creative on a deal this size. It's not uncommon to have a seller carry some portion.
Okay.
So yeah, and we would just have the seller record we would record the seller's um, note like 2 or 3 days after closing, so that the lender doesn't trip on the fact that we've got a second position.
All right. Okay.
So I need you to tell me which direction we're going to go, because you've already got them under contract for cash.
Uh-huh. Yeah.
Um, and it looks like
So
and I checked, there's no flood risk there. It's not in a floodplain, even though it's near a river.
okay.
And they
So
do
yeah.
allow short-term
So
rentals, so I'm not sure that that neighborhood necessarily warrants having a short-term rental, but
right.
it would be a good experiment to have one that's kind of close to the river and that's close to a golf course and all sorts of stuff. Um, just start with 1 or 2. It doesn't cost that much to furnish a smaller property like that, and just keep it as a basic Airbnb.
Yeah, man. Let's go. Let's see if we can assign this thing, man.
So you want to assign it and get the 200,000 and not do the long term. Is that what you're saying?
Um,
Because the numbers I was just talking about was if you wanted to JV it
right,
and hold it for yourself. And that's why I'm calling, because I
right,
want to know which direction do you want to go, because he's open to the financing, and I would just have to rerun the numbers as if someone was bringing a $200,000 assignment.
right. No, let's see if we can assign this, man.
Okay, so you want to cash out.
Yeah, yeah. I want to cash out.
Got it. And then who's our well, you've got a dispo team. Why haven't you sold it already? I thought you already tried to.
No, this was for cash. It was too much for cash.
Oh, you couldn't find a portfolio cash buyer, and you tried?
Yeah, yeah. It was a little bit too much for cash. Because
Oh,
initially we were just yeah, because initially we were just trying to get this deal, trying to get them to go down on price,
yeah. But it
and he
cash.
just and he just
So
and he just he just wouldn't budge.
so why won't your buyers bring their own funding?
Well, I want the buyers bring their own funding.
Yeah.
Well, I put it to you this way: we only sent it out to one guy, and he said he had a couple of hedge funds, and he never really got back to us on that. You know what I mean? Basically,
Oh,
there wasn't
okay.
showing a lot of interest. You
Okay.
understand?
All right.
So,
So
so
at
to
this
be
point,
honest with you,
you could remarket this as seller will carry 30%,
right?
and it's already in decent shape.
Yeah.
But let me change my numbers here to see where this would be with. So that our price is 1.5, the sale price is 1.7.
Yeah.
Okay. And the seller's willing to do 450,000. Hold on, I'm trying to do some head math here.
So let me hold on. Let me go back in front. Let me go back to this. Let me go back to these numbers.
Because I thought you were wanting to buy the deal if the
No,
numbers were good.
Yeah.
You don't like Albany?
No, I don't know too much about Albany.
Okay.
So 252,000. Um, that's 21,000 a month.
What's the 252?
Rental revenue annual
Oh,
252,000. Principal interest. And to be honest with you, um, Raquel, because Raquel just had texted me earlier today, and she was like, "Listen, would you have a conversation with him? Because he's not budging off this 1.5." Um,
oh man. So when I called him, I said, um, so we're already set at a price. You're fixed at 1.5 million. And my question at this point is, how do I pay 1.5 million? And that's the discussion I'm
right.
trying to have today. So we didn't even talk
Hmm.
about lowering the price. All we talked about was a little bit of terms.
Right.
Like if I could bring a lender in at 70%, will you carry 30%? Because you're getting
Right.
1,050,000 up front.
Exactly. And he may need some tax strategy help with that as well, man.
Oh, okay. Yeah, we didn't even talk about that.
Yeah. Because I remember him saying, he will be fine with us selling pieces of the properties off because he didn't even know what to do with all that money. You understand?
Yeah. Okay. Well, I do have a strategy up my sleeve, and it's called a 721 exchange. And that's where it's like a 1031, except you put it into a real estate investment trust, REIT,
Yeah.
and you can collect cash flow off of that. Um,
Oh yeah.
the dividends, you can capture that. So that way you avoid the capital gains tax on the transfer. And then when you die, which he doesn't have an heir, he told me his son died, I get it. When you die, it passes on to your descendants at a 0% rolls over to a new tax basis at the current value. So the capital gains falls off, which is great for people who have descendants, but I might have to talk to him and ask him if he has like a charity he wants to put stuff to, or I mean, like, what's the story there?
Yeah. Um, well, for what I understand is that, his son passed away, and I think he got like a daughter, and she's on drugs or something like that. Like she's not doing very well.
Mm-hmm.
So,
So what if he set up a trust to like care for her? I don't know. I don't want to talk too much without listening to where he's at, because he may like hate her, and me suggesting things is like I'm helping the enemy. I don't know.
right. He hang
Well,
up on you.
people get that way.
Seriously. Yeah, man,
It's
you
sad.
trigger something off. Yeah.
Yeah. Let them do the talking and just dumb me up.
Yeah. Um, so that's good. So that's good that we had this conversation before you called him back then. Yeah, because essentially the feedback that I got was that, at 1.5, that was pretty much too much. Um, at least for cash, for what they're
Yeah.
willing to pay up front.
Yeah. Well, I mean, I get it. I'd be getting a lender. My cash
Yeah,
flow, my cash flow works even at 6% interest. That's my assumption. So if I can get a lower interest rate than that from the long-term lender, that's great. But so
so
I'm still confused about you, because let me tell you these numbers again. If
okay,
like, so the cash flow is 40,000 per year. It's like 39 point something, basically
okay,
40, right? If we
okay,
cash out 40,000 up front to share amongst whoever's involved in on the acquisitions team, then
right.
the remaining assignment would be 160,000, right? That we didn't capture up front,
Jeez. Okay,
right? But
okay,
the 40,000 of pure cash flow profit per year takes 4 years to pay back that 160,000. That's equivalent to, if you did get the assignment of 200,000 and then you spent 160 to buy this portfolio, that's the equivalent of a 25% cash on cash return, which is freaking great. You follow?
yeah.
Assuming these are decent rental properties and that the area doesn't crash on us, but it's all about the cash flow. So that cash flow is enough to, and that's assuming we can also get a commercial loan. The seller has already agreed to seller finance 30% of it, and then a private money lender that comes in with the full balance of the entry fee. So it's a $0 deal. It's actually a cash in pocket deal, because you're taking the 40 as a bonus to split,
Right.
but it's a cash in pocket deal to start, and it cash flows on day one. So I just want to be a clear answer from you, like, that's not what you want. You want an assignment instead. But I wanted to make sure you understood how those numbers worked out, so that you made a real decision. No, I don't want that. I'm fine either way, but I want to make sure you had a clear decision to make.
So okay. All right. So it's going to cash flow. Let's just do the pace method. Let's just round it up to 40,000. I know
Yeah.
you're a tech guy, so that's hurting your feelings.
No, I
So
do it
it's
too.
so okay. So it's gonna basically cash flow 40,000
Yep.
no
Annually.
matter what annually. Okay. So
That's
basically I'm gonna make
after. I'm telling you, that's after doing 10% for property management and 10% for um, vacancy management, or vacancy and reserves, like maintenance.
okay.
And Pace's number is
Okay.
15% total, because he has his own property management company. So that he calls it the war chest for 15%. I'm at
Right.
20% on a portfolio and 25% on a single home. And those are,
Okay.
the 25 is a really conservative number. So 20 is a decent number to cover management. So that number has already been deducted before we get to the point where we calculate cash flow
Got it. All right.
profits.
Now
So that's
now let's
40,000 in
talk about
profit.
this. All right, so let's talk about the 160.
Yeah.
Now, now that's where I'm kind of blurry at.
Okay.
So essentially, it's going to be the 160 is not the annual cash flow, right?
No, that's the assignment that you did not get.
So it's another 160,000 baked in here as well.
No,
In the
if if we assigned it out and got 200,000, which right now is based on your previous portfolio buyer, cash buyer, sounds like it may be optimistic. But let's assume $200,000 assignment fee if we assigned it. What I'm
okay,
saying is if we choose not to assign it or assign it to ourselves, and we capture a $40,000 assignment fee to ourselves at the start,
right,
that means we didn't collect 160,000 in assignment. You follow?
right. Yeah, I got
Okay.
that.
So that 160 is equivalent to our by choosing not to take it as a cash assignment, that's equivalent to our cash investment into the deal. Yes?
Yeah, got
Like
it.
had we assigned it and then bought an equal deal and only had to put 160,000 into it, and that if that other deal cash flowed $40,000 profit annually, that's a 25% cash on cash return for the 160 that we put in.
Right.
So, if you had something better to do with the full 200,000 balance, that would get 25% or higher cash on cash return, definitely get the cash out and do it. But if you don't, 25% cash on cash return is stinking incredible. Like Pace would buy, I think he's at 20% minimum now because he's got access to really good deals.
Okay. So basically, what you're telling me is that I no, I get what you're saying.
You get paid now and then
So,
you get paid every month forever.
well, yeah, but would it be forever? Because he only wants 5-year terms, right?
Yeah, so we refinance him out. I can run the detailed numbers and see where that lands. But the 160,000 in profits has already come in within 4 years or 4.5. So your assignment equivalent has been already captured at that point.
Yeah, clearly. Yeah, I'm just wondering what it would look like in terms of a refi at that point.
Right. We also have a private lender that's in the mix.
Exactly.
And that
Exactly.
that private lender's in the deal for 10%. So if we can get them out, then maybe it's worth spending some of that monthly cash flow in $5,000 chunks to pay down that lender.
And how
Or
much is he in it totally? 450,000. The
um,
lender.
no, that's the oh yeah, the seller is at 450,000 and the private money is 145,000.
Okay.
Which if we could get that
Hmm.
lower, great. I've got closing costs at 2% of 1.5 million is $30,000. I have, which I don't know if that's low or not. Normally you assume 2%, but we have more properties than we do thousands of dollars. And I normally
Right.
budget I normally budget like two two to 3,000 per property. I'm gonna have to have somebody check that assumption.
Yeah. Yeah, man. It's an incredible deal, which really gives me the confidence that we should be able to dispo this to somebody. Um, I don't want to jump this big on my first deal.
Okay.
Not my first. Yeah, not my first subject. So so yeah. Let's go at the angle to where let's make it to where it should be easy to dispo this to somebody who wants to get an incredible cash flow.
Yep.
Zero out of pocket, obviously.
Yeah, if they've got the lender connections. Okay.
So
I'll I'll put the
so
numbers
so
together for you so you can market it as
okay,
a partial seller finance.
okay.
Yep.
Yeah.
I'm glad
Yeah,
I'm glad we got that all cleared up. That was important to review.
yeah. And hey, and if we can get them to come down a couple 100,000, that'll be even better.
Oh, yeah, I hadn't even tried for that. Didn't you say that if he couldn't get his price, he would just go to the grave and let him cash flow and let the State take him?
What it was is we was trying to get him down, man. Like we was trying to get him down, like really like 700,000. To be honest with you. So it's not a situation to where he was like 1.3, no way, I'm walking away. It was like, well, yeah, now 800,000. I don't know about that.
Yeah. All right. Well, I'm gonna run these numbers, see if I can get something attractive that's sellable, and I'll ship it over to you.
All right, good deal.
Yeah.
All right.
Okay. What do you think about that? I'm like, man, capture this deal. Just capture the deal. Who's down? Who wants in on this deal? Well, he's got to get a $200,000 assignment fee on this $1.5 million deal. So it's a 1.7 as it stands. So I have to rerun numbers, assuming somebody could get a commercial loan of for 70% of $1.7 million. Yeah, I'm going to rerun those numbers. But if you want in on this deal, let me know, because I would buy it with a partner. I might buy it myself if I can qualify for the loan. That's dang. Anyway, because I'll take my part of the assignment fee as upfront savings, other than like a $2,500 bonus. So I got more lunch money, and then I'll just take the cash flow. We'll see.